Hello everyone, here are the latest market news on June 4th, 2020. U.S. marks the first drop in jobless claims. The U.S. jobless claims likely declined 2 million last week, marking the first time since mid-March, although this number remains sufficiently high due to changes in the company's activity caused by COVID-19. Nevertheless, the weekly jobless claims report from the Labor Department on Thursday would suggest the worst in over for the labor market. New claims for state unemployment benefits likely totaled a seasonally adjusted 1.8 million for the week ended May 30th, lower than 2.123 million the prior week. Claims have dropped since hitting a record 6.867 million in late March. Meanwhile, the employment report for May, scheduled for release on Friday, is likely to show nonfarm payrolls falling by 8 million in May after a record 20.537 million plunge in April. The unemployment rate is forecast surging to 19.8%, a post-World War II record from 14.7% in April. Grab teams up with 3,000 stores in Asia. Southeast Asia's ride-hailing giant Grab Holdings Inc. is expanding delivery services from convenience stores and supermarkets across 50 cities in the region. The Singapore-based startup said it has lined up with 3,000 stores as it accelerates delivery of groceries, beverage, and other goods to cater to consumers mostly stuck at home during the coronavirus pandemic. Grab provided the service in 2 countries before the COVID-19 outbreak, and it's now available in 8, including Myanmar and Cambodia. Meantime, regional head of GrabFood and GrabMart, Demi Yu, said the company is boosting investment in deliveries this year to meet rising consumer demand. Japan expects 2% rise in real GDP. On Thursday, Japan's economy minister Yasutoshi Nishimura announced the 117 trillion yen stimulus aimed at softening the economic blow from the coronavirus pandemic, which is estimated to boost real gross domestic product by about 2%. The country's government last month approved a new $1.1 trillion stimulus package that includes significant direct spending as the hit to economic activity from the virus threatens to push the economy deeper into recession. The new package followed another one which was rolled out in April. The government estimated the increase of real GDP with recent stimulus measures, including the latest package, to be about 6.4%. Rosneft replaces oil trading unit by Energopole. Russian oil giant Rosneft, which closed its trading arm after sanctions were imposed by U.S. authorities in February, has set up a new Geneva-based trading business called Energopole SA. The new company will take on the main functions previously carried out by Rosneft trading of refineries in Germany and some trading operations in Europe. According to the Swiss Federal Registry of Commerce website, Energopole was registered in Geneva on March 31st, and before that the entity was called Rosneft European Service Group SA. The enterprise, which has just started operations and still going through clearing process with banks and counterparties, will lift 82,000 tons of CPC blend oil from Rosneft's resource loading on June 13th through 14th.